to the historic ratio of 15-1, but that ratio will certainly narrow, and that gets you to your silver value. So yeah, 24 bucks an ounce, 2,000 bucks an ounce on gold, severely undervalued.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. Excited today to have a guest that it's her first time on the show, although I think you all know Lynette Zang, Chief Market Analyst of ITM Trading, who is joining me today to talk about some of the fascinating things that are happening in the world, the financial markets, of course, gold and silver. And real quick, before we get started, I'd like to let you know today's episode is sponsored by First Majestic Silver. So I know we have a lot of silver fans in our audience. And if you're expecting higher silver prices, First Majestic, certainly one to know about. Keith Neumeyer, who appeared at Silverfest last month, updated what they're doing, which you'll see at the end of this video. But with that said, Lynette, it's a pleasure to welcome you on in here today. And again, it's such a fascinating time in the world. So how are you? And nice to have you.
Well, I'm really happy to be here. So thanks for having me on. And yeah, I think the Mint is telling you higher silver prices, aren't they?
Yeah, well, I heard, I know a lot of people were actually asking about that. They heard the $67 price, which I hear is just for like a specific numismatic collectible. But yeah, actually, that'd be a great place to start. What have you heard there? You obviously deal directly with customers buying and selling silver and gold. You're sourcing it as well. So how about we start there?
Well, we could, although I don't personally work directly with clients, but ITM certainly does. And yeah, actually on the Mint's website, they're talking about $54. And when I saw it, I mean, I could be wrong because I don't have the document in front of me, but I'm pretty sure that was just for a standard eagle. So, and then I also have heard that they're coming out with 67. So they could make that some form of collectible, but I think the 54 was just for a 1 ounce eagle.
Okay, well, will be interesting to see what happens with the Mint. Actually, another Mint question. Can you perhaps explain to anyone, how is it that they claim to be running out of coins? It just seems kind of bizarre.
Well, yeah, because they have what they call blanks. And, you know, demand, we saw what happened back in March and April. So demand exploded, but in the physical, this is the beauty part, and people don't really quite understand that. It's because we've been taught to think that whatever Wall Street puts up as a value is a value. But when you're dealing in the physical world, there's a finite amount. Right. So when you had this huge rush that has continued, maybe it's slowed down a little bit, but all that silver that came off the market, it didn't come back on. So that's what the Mint is dealing with, just like any other gold and silver dealer. When you have, you know, demand that far outpaces supply and you can't get supply really easily, then prices have to go up. Even as the spot price is still, I think it's somewhere around 24 bucks. Which is severely undervalued.
Yeah,
that's an infinite. Those, you know, those contracts, they can make as many of those as they want.
Yeah, well, I'm certainly on board, and I don't know if you were completely aware. You've wandered into Silverbug Talk Radio here, so we're big silver fans. And another great thing you just mentioned there, 24 being severely undervalued. I certainly agree, but perhaps maybe if someone was hearing this for the first time today, how would you explain that to them?
That's actually pretty easy to explain, because what both gold and silver are monetary metals. And that fiat note that actually is mostly digital these days, but if you look at it, it says Federal Reserve note. And, you know, so when I'm looking at severely undervalued, what we're really coming up to, what we're already walking through, is a complete financial system and currency reset. And I've been talking about it since the system died in 2008. And when they reset a financial system, they actually revalue that government fiat money, so the dollars in this country or wherever you happen to be, the government money, against real money, which is gold is the primary currency metal, silver as the secondary currency metal. So they revalue it against gold. And then gold will rise in terms of that currency somewhere near its true value. And of course, silver as the secondary monetary metal it'll also rise in terms of those fiat dollars. Silver plays a dual role, obviously, because it's used so extensively in manufacturing. Though both of them, I find this so interesting that I hear so few people talk about the use of both gold and silver right across the entire spectrum of the global economy. Not those paper contracts like spot, which is so easy to create. I mean, that's just a joke. That's just a trading vehicle. But when they do that, I haven't calculated it out for a while, but I think it's critically important for people to understand the true value of any asset or any instrument so that hey, is this undervalued, fairly valued, or overvalued? Therefore, do I want to buy it? Do I want to hold it? Or do I want to liquidate it? And since in the current system, money is created from debt, to get an idea of how many new fiat dollars or euros or yen, but how much government money is out there, you have to look at the debt picture, which we know is a huge bubble.
Yeah.
And with gold and silver, there's just a finite amount of it. And so you just simply divide just to make it easy, you're not going to get to the penny, you just want to get close. You divide the amount of debt by the amount of gold, and then that tells you, we don't know, there's the debt clock, that's perfect. And you can even use that, even though it doesn't account for all of the debt. But you can use that, and then you can get a pretty good handle. Like the fundamental value of gold is somewhere around $11,000, $12,000 an ounce. And I do think, I don't know if we'll go exactly back to the historic ratio of 15-1, but that ratio will certainly narrow. And that gets you to your silver value. So yeah, 24 bucks an ounce, 2,000 bucks an ounce on gold, severely undervalued, which means you should be buying hand over fist while you can.
Well, I am on board with that. Yeah, and everything you said makes a lot of sense. One question I have for you there, do you think that we are going to see an overt reset, like Sunday night announcement again? Hey, by the way, everyone, gold's $12,000 now. Do you think it's going to go down, something like that? And
Yes.
Perhaps an add-on to that, is there anything that you've seen specifically indicating? Because I feel, and I think a lot of people feel as if it's happening behind the scenes, but when we might see something overt, any thoughts on that?
Well, 100% is happening behind the scenes, because you used to have gold fixed at 20 bucks an ounce and 35 bucks an ounce. And so when you see gold and silver was $1 an ounce, right? So when you see this, you know that the markets are disagreeing on some levels. When you'll see something, so it's already happening. The markets are resetting it, or you wouldn't see silver at 24 bucks, even though it's severely undervalued. You wouldn't see gold at, wherever it is, 19 and change. Having said that, though, and this is the piece that people really miss as well, because they kind of have in their mind that Wall Street is going to get to dictate this. And while they do get to dictate some of it because of the contracts, at the end of the day, 100% of the time, it's the central banks and the government when all confidence is lost in the currency. When you see a pack of gum going for $12,000 for a pack of gum, which I know that sounds outrageous, but I'm old enough to remember when you got a pack of gum for a nickel. I don't know how much it is now because I don't really chew gum, but I'm guessing it's a lot more than a nickel, right? So when confidence is lost and there's so many zeros after those digits to buy anything, that's when they lop off the zeros and they start doing official resets. In the black market, we'll see that much sooner. But yes, I do think we'll go to bed one Sunday night and wake up, and maybe it'll be 1,000 to 1, maybe it'll be 10,000 to 1. It depends on how much new money they create, and they have to, and what that cover ratio is going to be. But yeah, I do.
I mean, it's going to be fascinating. You know, on one hand, I mean, certainly a lot of things that if I were making the decisions are not what I would do, but to the degree that life happens the way it does, going to be truly historic. I mean, I think we're living through a beautiful piece of history right now. And Lynette, would I be correct that based on what you're calculating with the price of gum, that you're not staying unable to sleep at night the same way Jerome Powell is, in fear of the low inflation that is sweeping the lands that he's saving us from? Is that right?
No, I sleep really well at night because I have, I'm all in. I know there are people that talk about, well, I have 10% of my portfolio in this. But as a technician, it is really, really hard for me. I'm not a trader, I'm a strategist. So it's really hard for me to buy something that I know is overvalued. And anything that is valued in terms of dollars is overvalued. That's what that inflation is about. That's what Jerome Powell, here's my hesitancy. It's a lie. I mean, anybody that goes shopping at the grocery store, you go to the doctor, or you're going for an education or insurance or anything that we're actually buying and using, really? You think it hasn't gone up 2%? No, it's gone up more like, depending on where you live, 9 and 10 and 12%. So that 2%, they just take out the stuff that you use and put in the stuff you don't use. And now he's going to let it run hot. Oh, yay. Which means we're going to go above that 2%. Woohoo. That's so good for us. I remember when inflation, I'm going to be 66 on Thursday, right? I remember when inflation was the dirty word, not a savior.
Yeah, it's funny how we were supposed to beat inflation back in the 70s and 80s, and now it's sometimes I wake up, I'm like, did he really say last month that they were going to raise the inflation target to make up for the deficit? I mean, it's certainly quite insane. Although, Lynette, I have a good follow-up question for you. I agree with everything you're saying about silver. So based on all that, why is it still so undervalued?
Well, I mean, it's pretty simple because it benefits the central banks. A rising gold, a rising silver price is an indication of a failing currency. And when people actually understand that the currency is failing, they make different choices, like I have, right? Like you have. And do they want you to take your wealth out of the system? Heck no. Because if you keep your wealth in the system, then basically what you're doing is volunteering your wealth. And then who do you have to blame? Who are you going to talk to? Who are you going to call? Yep. So that's why they have to keep monetary metals pricing suppressed until it benefits them not to have them suppressed anymore. And the fact that they're not, both of them are not a lot lower than where they are with all those paper contracts is telling us that there is a solid base. The shift has definitely already begun. We can see in gold, it's concluded what's called the cup formation, which is an accumulation pattern. Silver is still near the base. Silver is definitely, look at the charts. I don't have any, but if you can pull them up on stock charts, you'll see that silver is still building a base. And once it breaks out, we're off to the races. If you can go long term so that you can see that cup formation, I mean, like to 2013 when or 2011 when it hit that last high.
Memento. We will get
and
that
I can send you
up.
some as well. And it looks like the bottom of a cup. I mean, it's kind of choppy, it's not really smooth, but you can absolutely 100% see it. See, that's much better. That's silver.
Yep.
Okay, so you see where it peaked and you see that cup that is forming, it's still building a base, right? You see that?
Yep.
When it goes back up to that previous level, it will have broken out of that cup. But this is the smart money buying. That's what that graph shows you. Smart money is buying.
Yeah, I think so. And
JP Morgan's probably pretty smart. What do you think?
well,
JP Morgan can manipulate the price of silver and gold pretty easily. I don't know. What do you think?
Well, I mean, I agree with the second part. Are they smart? I mean, I would think of him more like the guy who looks like a poker genius because he's using a marked deck. But
yeah.
what do you think about that announcement of the $920 million fine? It's sure
cost of doing business as usual.
Yeah, and also at least what I've come to study and understand is the spoof. What's amazing to me is that even as these guys are getting fined and pleading guilty, the same thing. And I had the opportunity to interview Bart Chilton, the former CFTC commissioner, before he passed away, and what he defined as spoofing matches what continues to happen now, even after the fine in the case.
Exactly.
All for show.
Wall Street, it's a big casino, and we aren't on the dealer on the house side. That's what gold and silver and getting properly into position before this whole thing falls apart. But yeah, It continues. It absolutely continues. And it's all about stimulus. What's stimulus? What is stimulating? The stock markets. But Main Street doesn't seem to be too stimulated. No, just wait till they do UBI.
What UBI meaning?
Universal Basic Income.
Oh geez, I can't even wait for that one. Yeah, and I think that's the thing that people get frustrated by, where at least if some of this stimulus money was going to the people who were affected, although it kind of looks like it was a stealth bank bailout from, I didn't go through the whole thing, but the snippets I saw seemed enough for me anyway. Is that fair to say?
Well, up to 100%, but I would even take it further and say it was absolutely a corporate bailout. Yeah. There's not one doubt whatsoever, and that's who's really been stimulating. And and you say, well, if they just gave some to the Main Street, well, they did give a little bit to Main Street, maybe, I don't know, 1 or 2%, but 98, 99% went to those that have access to Wall Street. And when you look at what happens when they say, oh, stimulus isn't coming until, I don't like to get political, but till after the election, the markets went boom. And then it was change and they went boom. But it's because everything is so great. These corporations are making so much money. And I hope you can tell I'm being completely facetious.
Yeah.
Because they're just taking on massive, massive amounts of debt. This is how money is created in this system. And for anybody to think that it won't have, I mean, it's worse than a tsunami. It's worse than a super fire. When this house of cards collapses, you better not be in its way. And you need, and you do that with food, water, energy security, barterability, which is for me what silver is primarily about, wealth preservation, which for me is what gold is primarily about, community, which is what this is about,
Yeah.
and then shelter. These are the things that you need really no matter what. And can I ask you a question, Chris?
Sure.
I'm
Sure.
curious.
Yeah.
Okay. Let's say silver goes to $900 an ounce, which
That
could
sounds,
be look like chump change.
I like where this is going.
Well, here's the question. When that happens, will you be converting that silver into that fiat money at $900 an ounce?
No, and I'm glad you asked that. Someone's emailed me a question like that today where, and I was long on the way up in 2011 and I didn't sell at the top. So by all means, I'm not claiming to be the expert on that, but yeah, that's the whole thing where, and I guess that leads into the next question where to me, it just always, when you understand the Austrian economics, it's past the point of no return. There's no, and if it's this late in the game, and they're just, I'm sure in the debates last week were full of talks about deficit reduction and budget cuts and, bringing the troops back home and all that. But is there any other way that this ends?
No. There's over 4,800 times historically where governments have attempted this big experiment.
Yeah.
The difference between those any of the times that happened prior to say 1900 and today is that this was the first time historically where the central banks made an attempt to manage the rate and speed of the inflation.
Yeah.
That's really what enabled this experiment to last this long. But it's still an experiment, and anybody can go on the FRED website, the Federal Reserve Education Department, FRED.
Yeah.
You can search that and look at the purchasing power of the US dollar officially, and you can see how much value the currency has lost. So if there's no value left in the currency, which is one of the reasons they need to take us digital, so they can then, as invisibly as possible, or not, or actually very visibly, attack principal. But the tool are interest rates. So the world's been anchored at zero or near zero since 2009. So you have no tools left, and there's no value left in the currency. What's left is the confidence. Because what they knew when they created this joke of a system was that people marry the legal money of the state. So even in this new digital currency, what's it called? Shocker, the digital dollar.
Yep.
That's just a name. It doesn't mean anything. But yeah, no, this will end very, very, very badly for most, but actually it's also the opportunity of a lifetime, because we are able to still at this point purchase real money, gold and silver, at such a deep discount. And what happens is you have income producing assets that are severely overvalued, like real estate, severely overvalued. You've got gold and silver that's severely undervalued. But as this whole thing evolves, and especially during the reset, this is what happens. Now, you said you wouldn't turn it into fiat. Only reason why I would turn it into fiat is if that's what I needed to make this purchase. But by that point, people understand what's happening, and they don't want the fiat money. They don't want the government money, because all confidence in the system is lost. Yep. So it's a horrible thing that we're going through, but for those that can see it, which is what your work is about, it's what my work is about, then we have the opportunity to get into position today at severely undervalued levels so that we can execute. I developed a strategy because I've been studying currencies since 1987. I'm an ex-stockbroker. And, and that's why I started studying currencies then. And what you see are these repeatable patterns. And so even though I can't guarantee what's going to happen in the future, I don't know. I kind of think that if we're doing the same thing, the most likely outcome is we're going to get the same result. And so I can tell you this from all my studies, because I am a database decision maker. Yeah. And from all my studies, 25 ounces of gold or the equivalent would buy an entire city block, buildings and all during these kinds of resets. And even if you look at what's happening right now in countries that are already going through it, like Venezuela, you've got 90% of the population that is in abject poverty. I didn't say 100%, did I? No. And those are the people that get to buy up these assets that ultimately in this country will be, they're very overvalued now, they will be undervalued. Because when you come to tangibles, I've been very fortunate in my life, and I feel like I've been groomed for this moment in time. And my uncle Al was a major antique dealer back east, and he was my favorite uncle. So in the 60s and the 70s, when I spent a lot of time with him, he taught me how tangibles move through a trend cycle. And they always go from, again, simple, undervaluation to fair valuation to overvaluation to fair valuation to undervaluation. It's like a constant thing. And this is where you want to accumulate it. I didn't sell out in 2011. I just keep buying because I'm not a trader. And I clearly know that this is the end of this fiat money experiment. And I can't tell you the exact moment that it'll become apparent to everybody. They should have gotten a taste in March and April, frankly. That was just a little sip of what we have ahead of us. But I'm 100%, there's not one little doubt. There is no doubt in my mind about what we're already walking through. People used to complain when I would say that. They go, well, Lynette, nothing's happened. You've been saying this for years and nothing's happened. That's only because you don't look beneath the surface. I look beneath the surface and I can see the deterioration, even if on the surface nobody else can. It doesn't matter. When do you want to know about something? When it's too late to do anything about it? So I'm with you, Chris. I didn't sell in 2011 because this is not a trade for me. It isn't about capturing fiat. Go on the Fred. You can see how much value the currency's lost since 2011. And they're telling you it's not enough. We need more inflation. We're going to let it run hot. They're telling you the dollar's overvalued. Simple.
Yeah, which, I mean, I guess maybe that makes it exciting because based on the last 6 months, I mean, I'm darn curious to see what the Fed will come up with at next year's press conferences. I mean, they're going to keep going. I mean, what else could you pull out? And Lynette, sorry if you heard a little noise in the background there while you were talking, because I got so excited. You were giving such beautiful monetary history. And I was thinking if only we could have had you back here to explain to Ben Bernanke when he mentioned.
But let me just end by saying that nobody really understands gold prices, and I don't pretend to really understand them either.
Thank you. Mr. Chairman, thank you.
And Lynette, we will add you to the list of people that apparently Ben Bernanke doesn't know, since seems like you understand the gold market just fine. Perhaps if you have some spare time, we could get you in there as the Fed chairperson, and we'd all.
Oh, I would not want that job. This is not figuratively. They literally, for people in these top jobs, they actually look for sociopaths. And I'm not being, joking around at this, but the impact of the choices that these human beings make on masses, they can't really care about that. They can't. No. They have to make these. So no, that is not a job that I would want. But Bernanke, who touts himself as, you know, this great historian and understands the Depression and that whole period so well, I'll just do this.
I think
You
he's,
don't know what that means. It means because you don't care enough to give the very best. And
yeah,
I'm a lady, so I wouldn't do that.
I think Bernanke skipped the chapters about what Hoover did while people were starving, and Hoover had started giving subsidies for farmers to destroy most of their crops. But why let that stand in the way? Fortunately, Lynette, we don't need, we'll let the Fed do what the Fed does. Although, can you let folks know how they can get access to you, the services you offer, and how they can find you?
Absolutely. Well, for one thing, we have a very active YouTube channel where I also interview people and do research reports and deep dives. So if you just go to YouTube and you put in ITM Trading or my name, Lynette Zang, that'll come up. And we also have a wonderful website, itmtrading.com. So, and we have a great phone, 888-696-4653. And I'd also like to say that what really makes us different is that the strategy that I created for myself before, I've been with ITM since 2002. And the strategy that I created for myself before I even went to ITM is based upon those repeatable patterns. And so if you're working with us, that's what our whole system is really based around that. And it uses both gold, physical gold and silver, and it helps you identify those patterns. That's what my work is. A lot of my work is about helping you, the individual, identify those patterns so that you can make educated choices that actually put your best interest first. So you know what to do when you've got, you know, huge amounts of silver and gold. What are you going to do with it? How do you walk through this whole thing? Because it's the greatest wealth transfer, and why not have that wealth transfer your way?
Well, I sure agree. I appreciate you mentioning that because, again, yeah, there's things that are perhaps less than ideal, but what we maybe that's the point of life, to learn that we can control what we can control. I
Right.
appreciate you being a resource for that. Thanks for coming on today. It's been a pleasure to finally meet you, and we'll have to do this again soon. And thanks so much for being here.
Hey, it's my pleasure. This was a lot of fun. You did a great job. Thank you.